Welcome to the Liquidity Event, a show about all things personal finance with a laser focus on taxes, financial independence, and equity compensation. Hosted by AJ and Shane of Brooklyn FI, each episode will focus on a personal finance topic, some driven by news headlines and sometimes driven by listener questions. And sometimes you'll just get two money nerds rambling about what they think is interesting. Just a quick note before we get started, this podcast is for informational purposes only and should not be considered tax or investment advice.
And welcome to the Liquidity Event. I am your host, Shane Mason.
And I'm AJ Ayers.
And this is episode 190. AJ, we're almost at 200 episodes of the Liquidity Event.
Oh, Ariel and I we know exactly. It's going to be on September 8th, and it's going to be lit. It's going to be super lit.
We stopped on 100 the first go round and took a break, calibrated, and then came back. Maybe it's time for another break.
I'm sorry. I just noticed that your avatar name is Kanye West. Wow. For those not watching on video, you're an idiot because Shane has a Mexico soccer jersey on that says Kanye as the name on the back.
Oele, I'm totalmente mexicano esta semana. Yeah, dude, we're going to the World Cup next week, and my boy got me a ticket. So I got him a jersey. Mexico, South Africa, the reopening of Stadium Azteca. Very excited.
That's
coming
killer.
Off of, we're going to AICP Engage next week, and then strangely enough, the moment the exhibitor booth shuts down, there's a flight back to Mexico City, which your boy will be on. Excited to go see the World Cup opener in Mexico City. Our lives are very blessed, AJ, are they not?
They truly are. I feel so blessed today because I have two working toilets.
Tell me.
We're at different levels of blessed today, but our blessed is not always aligned exactly.
Yeah, hell yeah. What's going on again?
You know, you shouldn't eat Mexican food in New York, I believe, is the joke that you made. No, it just, this apartment building was built in 2008. The toilets have not been replaced since then. Like, you have old toilets, they get finicky, and then it's just time to replace them. And you have a plumber try to fix them 4 times, and on the 4th time you say, it is time. So, took the toilets away, got 2 brand new Kohlers. One's called Santa Madre, and the other one's called, I can't remember. They had such good names. Nabil and I
you didn't go Toto, the Japanese, like $6,000.
Here's why.
They're expensive.
Well, it's not the expense. The real tea is that they break. And when they break, it's like a Tesla. It's like a computer problem. It's like you can't call the plumber. Like you got to call like the software engineer and the plumber who, So in my toilet, I want reliability.
It's all computer, as Donald Trump would say. We don't want software in our toilets.
I don't want software in my toilet. I do not. I want porcelain.
Analog.
I want porcelain chains and plastic.
What a kickoff to this week's event. This week's Liquidity Event. You can tell we have not recorded in a few weeks because we were in...
Oh my God, we were so busy.
We were so busy. We were in our New York retreat with our employees. We went upstate to Kenzo Hall, right outside Livingston Manor. Had a great time in the woods, essentially. We built bonfires. We did karaoke.
We did pranks.
We watched movies. AJ pranked John. She hit him with a megaphone and ice. How many people did you ice that week, by the way? 6 people, probably 6-pack of.
Well, I was one of them.
We had a great time. I didn't say anything too revealing or, my tangent. I'd like to be authentic and a little bit too transparent at the company retreat. And then we had our client event at Penny Hall in Williamsburg. We had the best, outcome or the most amount of people that have ever shown up.
It was crazy. It was
nuts. Yeah. You and I shot some cool videos announcing our FPA NorCal attendance because we launched Gemifi in San Francisco last week, and we had a client event there as well.
So tired.
We had a great turnout. I know. I'm tired too, sister. This is all caffeine happening right now. And we launched Gemifi, and now we've got all these demos being booked and all these bugs that need to get fixed. And now we're going to AICP Engage next week. You're having a baby shower this weekend in New York, which unfortunately I cannot attend.
Okay.
Otherwise, I think
you forgot Basis
that.
Northwest. I got on a red
totally
eye
forgot.
And freaking went to Seattle
after a client event.
Oh my God, I forgot the biggest highlight, the biggest headline of them all is that my sister and I were on a ferry from Seattle to Bainbridge Island, which is like just off the coast. And we saw a huge pod of whales. It was insane. The ferry captain, it was like
that.
it's like a commuter ferry, and the captain's like, "Hey everyone, go up to the right side of the boat because there's like a orca whale and some blue whales." Your boy Ryan actually TM'd me, and he's like, "Where was this? I'm gonna track the pod." And he like told me all about, because they obviously all the whales are tagged, so he knew all about the whales.
Wait. I have a lot of Ryan boys. Which Ryan boy are we talking?
The long hair one, the Brooklyn.
I've got a lot.
The Brooklyn one that came to our party.
Yes. Hell yeah. All right, sick. Very cool. I'm also somewhat of a whale tracker myself.
Always hunting whales here at Brooklyn FI.
We call them tortas down here in Mexico. All right, on this week's episode of the Liquidity Event,
oh my God, we're not even this by now. It's
we
5 minutes.
haven't gotten to the articles yet. We've got lots of equity comp stuff, lots of IPOs are back, baby. We've got SpaceX, Anthropic has filed confidentially, OpenAI is behind. Oura Ring is. Are you wearing an Oura Ring?
No, I would never. Let's talk about it.
Oh, okay. I have one somewhere in the house. We had a great client event this week where one of our clients let us know about this policy that we missed through the news. Carta apparently had lobbied to allow for startup employees to push their startup equity or vested equity into IRAs, which has a litany of issues with it, but also great outcomes, which we're going to dive into. Can have great outcomes. Oura Ring is filed confidentially for IPO, so everyone's jumping on in the 2026 bandwagon. Fidelity has a Q1 report on retirement analysis, is going to highlight the K-shaped economy. As usual, Robinhood lets customers use AI to trade stocks, make credit card purchases. We've got Phoebe Gates in the news claiming she's not a nepo baby. Really want to hear your take on that. This is your article, so I really want to hear.
It's not even an article; it's a LinkedIn post. It's just a footnote. And we have the Anthropic confidential S1. So
absolutely,
we will obviously get into that when we see it, but it's currently confidential, so only the employees of the SEC and the finance teams at Anthropic have access to that. So as soon as we get it, folks, you will know.
Let's start us off with Carta policy on equity comp. They have a proposal, which they've listed on their website. They went to Washington and proposed this to. How cool to be a startup CEO and then get invited to, like, you're so good at this one thing that you get to sit in front of Congress. One day, AJ, one day. Their proposal was to allow employees to contribute vested exercise employee equity directly to their 401k, not just IRAs. Subject to standard contribution limits, the income would be taxed at vest or exercise so that any future appreciation, including liquidity event gains inside their retirement account, would be tax-free, consistent with how Roth accounts are designed to work. AJ, let's get going, baby.
I love this for Brooklyn FI clients. This would solve a lot of tax problems. This would make a lot of our employees even wealthier by putting, vested exercise equity instead of having to wait for, at IPO, paying a bunch of tax. It would be totally protected. It would be totally shielded. Now, there's a couple problems with that, right? 401ks are fantastic for building long-term wealth that you're not going to need until you're, 72 and a half now. So if it's in that account, you are not, you're not allowed to. You are allowed to take it out at a significant penalty of ordinary income and a 10% penalty. The point is not to touch it. So most of our clients who are able to take advantage of these liquidity events use the cash, right? You exercise the stock early on, you hold it, maybe you hold it for 5 years, maybe you get QSBS treatment, but you're using it to buy a house, you're using it to fund an early retirement, you're using it for financial independence, all these things. Like, what is the point of it? Like, this is for Peter Thiel, who already has, unlimited cash flow because he can borrow against his massive portfolio. This to me seems like a further K-shaped economy thing. Like, it's only going to help the top 0.2% of people who have early exercised equity and they don't need to rely on the liquidity event to fund their financial independence. That's my take.
I have a steel man argument for you in
Please.
the other direction. Yeah,
Please.
that would be, so I think about, like, one thing is, like, if it's an early enough stage startup, then probably two things are going on. One, the value of the equity isn't a lot right now, right? And then the other thing is that the employee probably isn't getting paid a ton as well. So they might not be able to max out their 401k with cash that they're getting from their salary. So maybe there is, like, a little bit of space between the 401k contribution limit. And look, they're like, hey, I got this equity. I've already paid taxes on it. And maybe it's not even publicly traded yet. Or it is publicly traded, but it's not a lot. Like, it hasn't gone to the moon yet. let me just throw this into my 401k because I have nothing else to put into the 401k, right? Like I bet you there's a ton of but I think both things can be true at the same time. So I think
how about and look, this is just a proposal, right? This is just like a white paper. It's a white paper with a photo of someone at Washington. So I think this is not like law yet. But think about the idea is that you would put in vested RSUs. So if you're putting in vested RSUs, that means you're paying taxes on them at a certain value. And who's to say that they don't that they go up? So like to me, again, you have to have a lot of capital to take advantage of this, that you would receive the RSUs, pay taxes on them, and then lock them up in an account for 30 or 40 years. Like the math ain't math in here. I think there's something I'm missing, or there's something the law is missing. What I would love to see, Shane, are government grants, like the ESO fund or like the Equity B. I would love to see the government get involved with grants for specifically low income people who work at startups and yes, cannot afford to exercise their shares early enough. So, we got these Trump accounts, which are like helping everyone. What if there were some sort of like tax credit or some kind of education credit where here's a $10,000 grant if you make less than $200,000 and you can only use it to exercise options at a company you work at? I think that would be maybe more effective than this, which is just, kicking the tax can down the road for people who already benefit from all the tax breaks.
So you had me thinking about all the different taxable things that are going on with equity comp already.
There's a lot, yeah. I mean, I feel like I said some things wrong because I'm not even thinking about the implications of adding a tax-deferred layer to the already complex world of equity compensation. But
I hear you. Yeah. QSBS, 83Bs, early exercise.
I mean, there's already, we have a business
stacking,
we have a whole business based on
double trigger,
exploiting the tax
PSUs,
benefits of equity.
RSUs, founder shares. Keep it going. Yeah. That's a whole thing. So, well, speaking of startups that are experiencing some vesting, we have a liquidity event coming up for Oura Ring, who we discussed earlier, or the company that creates Oura Ring, which apparently was founded in Finland in 2013 and then a whole 13 years ago, and is now has moved to San Francisco, has 5 million users and $1 billion of revenue. They have filed confidentially, and then they issued a press release to let us all know that they filed confidentially. So we're awaiting the SEC's comments on their initial filing, and then we'll see if it looks good. Then we'll get an IPO, a fourth IPO, or a tech IPO, I should say. It's funny, AJ,
IPO that
because
we're paying attention to.
Right. It's funny that like in Gemifi we have every IPO like flows into the dashboard, and so there's just like, because there's not a lot of real ones that we care about. It's SPAC, American Acquisition Corp.
Yeah, or it's like a biotech company that has 6 employees but $10 billion of funding, or
or Weber Grills that was founded in 1961 and is finally IPO.
Yeah, it's interesting. I mean, the health techs, and I'm not qualified to comment on this in any meaningful way, but just as a Luddite trend noticer, we've got Oura Ring, we've got Strava, the running app tracker, lots of interesting like wearables, health tech coming to the space, and potentially like, my fear is that this is like a Peloton in the pandemic story where like you said, you're like, yeah, my Oura Ring is somewhere in my house. Like you bought one, like their sales were benefiting from their growth story is everyone who is able to buy one buying one. And then what happens? I guess there's a subscription, but to me, there's kind of diminishing returns on hardware. So I don't know. Whatever.
Counterpoint again is
Please.
that I agree with you then that it's riding a wave, and I would say that it's the AI wave. It's the distribution that Anthropic, like everybody is used to using OpenAI and Anthropic at this point, their models, but you can't wear an Anthropic item. Whereas you could throw an Oura Ring on and then transition all of that data, link it up with an Anthropic, and then have a conversation with your Oura Ring, so to speak. So they might be riding the wave of these two things are complementary and codependent. So I mean, I don't think IPOs work that way, but it is not a coincidence that these two things are rising in value at the same time, I believe. Yeah,
I mean, you have like the Meta glasses, you have, what are the other things? I mean, Apple Watch, like, as much as I make fun of them, I love my stupid Apple Watch. I love that it tracks how many steps I have. I love like my little texts while I'm driving. Like I love talking to it, walking around like a crazy person, talking about the companies I want to found with you. Like that's what
that's what we
do.
Yeah, it does overcome even the most tech or like fashion forward type of people. I would say if Google Glasses make you a glasshole and AirPods are like the most normal wearable, I would put the Oura Ring somewhere in the middle of that spectrum, right? Like you notice it, you clock something about that person, like, that person is a bit of a nerd. Like they're trying to track data and like they probably aren't living an analog lifestyle fully. And I think it's I think just like fedoras, like Michael Jackson can pull it off because he's already very, very cool. If you're cool enough, you can wear the Oura Ring, and it doesn't quite take enough. It brings you down a notch. But if you've got enough to start with, then you're good
I
to
agree
go.
with that. I agree with that. But the percentage of those who wear Oura Rings who have that Riz, I believe is what the kids call it, is very low.
Right. Thus, I can't find mine somewhere in the house because I took it off at some point in fear of my Riz dropping below a
threshold,
a significant threshold.
The Oura, anyway.
Up next, we have. First we had contributions.
You always make fun of me for.
Accounts. No, I got it. I have this. If you hadn't introduced me. First, we had. Now, we're jumping into our Fidelity retirement contribution accounts. We've talked about the K-shaped economy already once and making contributions to your retirement accounts. Fidelity issued its Q1 2026 retirement analysis. And despite what some people consider a uncertain economy due to what's going on with the layoffs in the AI space and then inflation being through the roof and gas being unaffordable and just American life being unaffordable in general, we do have the highest contributions to retirement accounts in history, according to Fidelity's report. AJ, what was your take on this report from Fidelity?
I did not get past the photo in this article of this elderly boomer couple on the beach who definitely benefited from years of tax policy and wear Oura Rings and definitely have kids who could really use their money to exercise their ISOs at Strava or whatever. So that's as far as I got. Sorry. I'm just being honest with you. But no, I think 401ks are an interesting litmus test, if you will. Like when you hear someone, like even like my husband will be like, my 401k is going crazy. Because like that's just like a number you see because you like will log into it and it's potentially the biggest account you have. So it is kind of an interesting indicator. And Fidelity's, they've got the goods in terms of the data. They're the number one 401k provider. So, their data on how people are saving is, I listen to it. So if they're saying people are increasing their savings rate, I'm saying, I don't know, at least in the upward middle class, things are looking up for the employed. That doesn't reflect everybody else. So yes, you're right. K-shaped economy is alive and well.
Yeah, I mean, for everybody, that's, the average is going up in terms of contributions on a monthly basis. The amount of people that aren't making any contributions at all is probably also growing. One of the cool things I noticed in here was that
do we have data on whether it's if it's people hitting the plus 50 it's like catch up? Like, is it because we had that extra super from OBBA or one of the bills, there was like an extra one time, like, oops, you didn't save, but now you make a bunch of money and you're 55. And there was like this huge increase in the amount you can contribute. I wonder if that is skewing the data.
Yeah, I don't know. Yeah, it's like the median versus the average type deal. It's like the averages are up because the people at the top are contributing so much that it pulls the average up, but the median remains low. I didn't see that. I don't think it's in there, but there was some equity comp stuff in here. Actually, there was a 2026 stock plan participant research item, which I thought was cool. It says that equity comp is not only a gateway to investing, but also a source of financial security and a reason to stay with their employer. In particular, 43% of participants say they became first-time investors through their company stock plan, which I find to be cool to like get people exposed.
That's great.
I doubt that would be the case for Gen Z with their exposure to Robinhood coming up to the path line. You just, you can throw $20 into a Robinhood account.
Yeah.
Which
I mean, babies are getting shares of stock for their christenings or whatever.
Yeah, exactly. Which brings us to our next article, which is Robinhood lets customers use AI to trade stocks, make credit card purchases. Unsurprising here, but Robinhood is allowing its users to integrate with Claude Code and Cursor and some other tools to allow them to use natural language to invest. Apparently, there's also a Robinhood. I have to get a Robinhood account, AJ. Like what? I don't know at this point. I don't
think you can as an owner of a registered advisor.
We will
can take
see
you off
about
the ADV if you want.
The SEC is listening to this. I don't have an account. So moving on. This, what was your take on? I actually had I think I just had like a positive take this week, AJ, on all these articles. I'm going to give you.
Look, if people want to if these companies and these investors on the bleeding edge of messing around in their portfolios want to test all this tech, so we can use it for a few years and then have it transfer over to the general public to make investing easier, regular, not crazy investing available to more people, great. Like, I'm generally pro innovation and technology, and I admire the boundary pushing of Robinhood. I really do. Like, I think sometimes it goes too far, but like, that's what boundary pushing is. It's like, hey, we got to try this and see what works, and we have enough market share, and we have a loyal customer base. It's like a lab, right? Robinhood is a lab for new ideas about investing. So like, I personally think it can be harmful if you have the wrong type of personality and you don't have, friends and loved ones to bring you back down to earth. But like, for the most part, like, I pay attention to every product they put out, I'm interested in. And I don't even know how to think about the idea of a robot making credit card purchases for you. I'm too much of a control freak to even comprehend that. So I don't like this idea.
No comment.
Can a robot replace my toilets? There were no robots involved.
Looking like it every day. I don't know if you saw that packaging robot that did like a 400-hour shift without stopping and sorted like 2 million packages or something. And yeah, it's coming. They're coming. The robots are here. But yeah, I mean, first of all, Robinhood shouldn't be forgotten that safety was at the core of Robinhood, and they sent an email to a kid that was suicidal, and they told him that he owed a few $100,000, and he did kill himself. And even though that was an error on Robinhood's part, shouldn't be forgotten. Now, I'm trying to be optimistic about this rollout. I think that this could create some positive upsides for investors because they don't have the time, like professional investors like us, to check in on their accounts every day. And they shouldn't be checking in on their accounts every day. It's been shown from data that the more you check on your account, the worse you perform. So being optimistic, I'm hoping that people can use natural language to put limit orders on certain things so that they know that if Apple stock experiences a 20% decline, or if Anthropic does an IPO where they expect it to, then they don't have to log in to buy and sell the item, or it can sell before it goes to zero, so to speak. So I'm hoping that limit orders get put in place for these people.
Yeah. But,
you know what I mean? Like, it could be nice to
like
step
following
away.
That, but that has like wider market implications that you and I do not have the training or experience to even think about. But like, that's what the market makers and the portfolio managers are thinking about. It's like, yeah, what happens if, you can just automate literally everything, which we're already pretty much there. And we've had that technology. Like, we didn't need AI for that. It's just literally putting in orders that have limits and numbers. Like, I don't know. I think that scares me a little bit more. I was optimistic. Now I'm pessimistic. I changed my vote.
You can tell whoever wrote this one part of the article is not a professional investor, and they just wanted to get people hyped up. One prompt you could use: sift through startup funding, deal activity, and private company valuations to identify places where private market investors are putting their money before they have been discovered by the public markets. Heads up. Newsflash, dipshit.
Don't do that.
They're private companies. They can't be discovered by the public markets. Like, that was just such an annoying post by somebody that's like, we're going to get kids revved up because they could have got in Anthropic before. You're not giving people that opportunity.
That's not how it works.
That's misleading. Fuck off. Next part. Finally, we have we have 3 more things. We're running out of time here, AJ.
Yep.
We have the Anthropic confidential listing, which I think that we need to cover. It's looking like they have filed confidentially, and it looks like this will be the biggest year for IPOs in the history of IPOs. If the OpenAI IPO happens, if the Anthropic,
SpaceX.
I mean, I think it's a given that SpaceX is next week. It's looking like Anthropic could make it out the door by fall. OpenAI hasn't disclosed if they filed confidentially, and no one has leaked it yet. So we will be paying very close attention. We're all over the SpaceX IPO. We've got tons of clients going through that. There's some great content out on the internet about how the lockup period is. It's a very interesting lockup period. It's going to be multi-layered. It has to hit certain financial metrics to allow for people to sell. I don't know how they're going to hit those metrics, frankly. So we might be hitting some tough times and a long lockup period. Hopefully we don't experience a Figma-like event, but we're there with our clients, guiding them through along the way. We will be there with our Anthropic clients as well. Last item we might want to touch on, AJ, Phoebe Gates. You want to go out on a bang and talk about how Phoebe Gates doesn't think that she's a nepo baby?
No, I saw.
How could you not?
No. That was misleading. So I just saw this post on LinkedIn. I spend all my time on LinkedIn these days. It's where I meet all my friends and lovers.
True.
It was a Phoebe Gates, daughter of Bill Gates, for the record. Bill Gates recently in the news for his participation in Jeffrey Epstein's orbit, so not ideal there. So Phoebe has obviously trying to distance herself from her billionaire father. And she posted this thing on LinkedIn. So she has this startup called FIA, PHIA. That's like their simple mission is to make shopping smarter. And it's like, hey, if you want this like random used Louis Vuitton bag, this website will get it better for you cheaper. So like really like groundbreaking, cancer research funding stuff here. That was sarcasm. Anyway, whatever. She's got this startup, she probably did it on her own. She really pulled herself up by her bootstraps. She, got herself into Stanford, no help from her father. She uses his last name, for the record. By the way, for all the nepo babies out there, if you want to claim you're not a nepo baby, you don't get to use the name. You use the maiden name, or you make up a name. That's what you do. You don't use the name. That's okay. So anyway, here's the post. About a year ago, Sophia and I launched FIA with a simple mission: making shopping smarter. Today, I'm incredibly excited to share that we've closed an oversubscribed $35.5 million Series A. Okay, oversubscribed. That's great. Our new investors include iconic founders and cultural leaders like Khloe Kardashian, Alex Earl, Mindy Kaling, Carly Kloss, Jessica Alba, Paris Hilton, Sydney Sweeney, Ice Spice, The Chainsmokers, Vlad of Robinhood.
Well-known venture capitalists.
So obviously is Vlad investing in FIA because he believes in the future of the direct consumer or the marketplace, secondhand marketplace shopping and the long-term sustainability of that? No. He's investing in FIA because it's Bill Gates' daughter. So all I have to say about this is check your privilege, folks. And it's okay. Just be like, I'm Bill Gates' daughter. I had all this privilege, and it's confusing. And she got called out by an influencer for calling her startup scrappy. An influencer, she tried to she wanted the influencer to work for below their published rates. And Phoebe said, actually, sorry, I'm a really scrappy startup. Could you come down at all? And the influencer did not enjoy that.
Sorry, our cap table is really limited on funds. We've only got Paris Hilton, Vlad Tenev,
we have an oversubscribed. We have an oversubscribed Series A, but we can't pay you your $250 rate.
I asked Khloe Kardashian for a larger budget, and she said that she's strapped for cash. So, well,
whatever.
Thanks
it's
for
fine.
ending.
I guess. Okay. Wait. Sorry, I have a quick counterpoint to myself, which is like, whatever, fine.
Okay.
If you're the daughter of a billionaire, what else are you supposed to do? And if you're gonna create startups and keep people employed, sure, but you're also taking a lot of capital away from other people who might have more interesting and more impactful ideas. But just because you're a famous name and people want to be friends with your dad, they're maybe giving you some money. The end.
All of that capital would have flown or flowed somewhere else. We can't forget that our choices matter. Awesome wrap up. AJ, next week we do have we're out next week, actually. Are you filling in for me being at Engage?
I will be here. Yes, I will be here with Cody, I believe. I don't remember. I'm here with somebody fabulous. Yes.
Great. Thank you so much for listening.
See you next week. Ethan, thank you to our producer. Sorry, Ethan. Yes, Ethan and I are going to do a recap of all of the fish that he caught at our retreat because he spent the entire retreat at the lake fishing and not participating in any activity.
That's not true, but he did catch 600 fish. So if you ask him, he will detail them. Email us your financial problems at liquidityevent@brooklynify.com. And finally, you stands can leave us a review if you want to be weird about it.
See you next week.